Hey, what's going on, everyone? This is Sawcruhteez Streamz, and I am your host, Sawcruhteez. Today we have a exciting show planned. We have some interesting things happening in the traditional markets. Going to be taking a real close look at the S&P 500, and I'm actually going to be sharing with you the exact allocations of my current portfolio, which I am hoping will help some of you to get an idea of when I am looking at something to buy, and if it's only with a very, very small amount of my portfolio, that's much, much different than when I'm actually putting, significant money to play. Because there are some potential good buying opportunities that I'm seeing out there. So I wanted to go over what I'm buying, how much in terms of percentage of the overall allocation, and that's something that I probably won't do a whole lot of in the future, but I did I'm in a good mood today, and I did want to share with you guys the what I'm going to be doing, and I guess already have been doing this afternoon. So before getting into that, I want to thank everybody for their input about the show yesterday. I think it went great. Definitely had some, positive and negative feedback, as you would expect. And there was one thing that I wanted to cover. So there was a question in the comments that I noticed that somebody was just curious, just wondering, what did the profit and loss end up? What was the overall profit and loss at the end of that trading session? And it was a very reasonable question, but it was the wrong question to be asking. And I was really hoping that somebody would ask the right question, which would be, what did you learn yesterday? Because my goal yesterday wasn't to make money. I really did not care if I won or lost. What was important to me was to kind of just make sure I'm staying sharp and continuing to execute, and then B, to potentially learn something new. And when you do that, when the first couple times you do that trading on low time frames to kind of practice a strategy, you're going to learn a lot. Very steep learning curve. But then after a while, once you kind of get pretty automatic with it, you don't expect to learn too much, and you're mostly just practicing executing. So I'm really happy to say that actually yesterday I got some practice executing, and I also learned a couple things, which is very exciting to me. Anytime I learn something, that could serve me for the rest of my life. And if I won or lost a couple bucks yesterday, who cares if I learned a lesson that is going to make me money for the next 10, 20, 30, 40, 50 years. So the right question was, what did you learn yesterday? And unfortunately, nobody asked that, but I am always asking myself that. And there are a couple things that I learned. First and foremost is I gained a significant amount of experience with the Henkinashi candles, and I really am learning to trust those a lot more so than traditional candles. I haven't ever been using those to signal exact buy or sell opportunities, so I never thought that I should take it down to a low time frame and really practice trading using the Henkinashi candles. And after yesterday, my eyes were really open, like, wow, these things really are quite superior on low time frames. And then the first reason why I was attracted to them is because of how they were superior on higher time frames. So let me make a note just so we can remember to look. Hopefully we have time for that. I do have a hard stop at in 1 hour, so we will be getting into as much as possible. But essentially, what first attracted me to Henkinashi candles was how they outperformed traditional candles on the higher time frame. And now that I'm seeing how well they work on the lower time frame, I'm really starting to like them, and you guys are definitely going to see a lot more Henkinashi candles on my chart. So I would definitely suggest that you look into those if you're not familiar with what's going on with how they're calculated. It's pretty simple algebra formula. So gaining that experience and trust in the Henkinashi candles, it has really was much more, made yesterday's hour and a half that I put in practicing way worth it. So that really is exciting, and I'm definitely going to continue practicing using those candles just to really reinforce. Because again, it doesn't really matter if you understand what an indicator is meant to do or what it's trying to do. What is important is that you trust that it's going to do that in the heat of the moment. And when you are practicing on lower time frames, you can really build that trust in whatever system or tool that you're using. And just quickly, I'll go on a little bit of a tangent here, because a lot of what I do comes from my experience playing poker for a living. And there's one thing that I learned, one thing that has really stuck with me about my time spent playing poker was how the online poker changed everything. It allowed for people with 2 or 3 years of experience to have more knowledge and more expertise than people that had been doing it for their entire life. You've got these guys, the old guard, Doyle Brunson, and those guys who've been around for 40 or 50 years, and they had less hands played under their belt than some 21-year-old who has 2 monitors and they're 16 tabling and they're getting in hundreds of hands per hour, compared to sometimes thousands of hands per hour, compared to the traditional guys who are playing live poker only getting in about 20 to 30 hands an hour. So it's not necessarily how long you have done something, but it's how much volume you're able to get in. And if you're able to really get in a lot of volume in a very short amount of time, well, then you can gain years of experience in months, compared to people who are taking longer to get in that volume, to get in that experience. So long-winded way to say that I very much value experience and lessons more than money, because I believe that the right experience and the right lessons are worth their weight in gold. And if you are really focusing on improving as a person, improving as a trader, if your main focus is improving, well, the money's going to come. And that's where I am very, very, very focused on doing what I can to put in the work to make sure that I'm becoming the best trader that I can be. So yesterday it went great. And at the end of the session, did we win or lose? Doesn't matter. Did we learn some lessons? Absolutely. So very, very excited about that. And we will go ahead and definitely continue doing that format. I think it's a great way to teach, great way to learn. So I'm definitely excited to continue doing that. And let's go ahead and dive right into the charts. So did have a full entry signal today in the S&P 500, was already about 85% entered long. So today has just been that final little top off, essentially. And what we are going to look at is the weekly chart. All right. So check that out. We got a breakthrough of the weekly parabolic SAR. And that was the last thing I was waiting for. There were a number of bullish things happening down in here, but I'm looking at this SAR overhead and waiting. That's the last thing I'm waiting for before I want to make sure I'm fully entered. That was the point. So we do see beautiful support off of that 50 EMA, and we see beautiful support off of the 200 EMA right there. And we have been just stuck in this basically kind of like broadening topping pattern, which has really been a really tricky range. Trading the S&P 500 over the last year and a half has been basically a nightmare. It's really, really hard to make money in real time in this type of environment where you're making a lower low, and as soon as you make a lower low, the very next candle, basically, you go on to make a new higher high, and then instead of really taking off like a lot of people would expect, like right here, sharp correction, then we come back and make a new higher high, and you think, all right, now we're ready to kind of take off, like maybe back in here. And what happens is we just immediately reverse. Come up, make a new higher high, and immediately reverse. But this certainly created a higher low, and now look what we have here. A potential trend line that isn't coming in as nice as I want, so sometimes I will go ahead and look at how the most recent action using these higher lows. It looks like that is, if we are going to take off on a trend, that is how it's going to be done. And just have all these things that always come back on my chart, no matter how much I don't want them to. Okay, so this is what I would be looking at here. Is a potential new parallel bullish channel developing. Okay, so we just looked at how every time we've come up and kind of broken to new all-time highs, it hasn't gone anywhere. And I think this time is different because we're building off of two higher lows right here. Like back in here, it was higher high, lower low, higher high, higher low, higher high, higher low. Okay, definitely different than this action all back in here. And there's another very important reason why I believe that this time will be different. And I am sure hopeful, because yesterday, if you watched the show, you saw that in the first first 3 or 4 trades or so, the first like hour, I was just getting it handed to me. Every time I would enter long, I would be buying, close to the top and then immediately getting stopped out. And I just kept saying that, you just got to keep taking signals, because eventually that next one is going to, more than make up for the last maybe 3 or 4. And so think of that on a macro scale. That's what's basically been happening to me and to a lot of people in this range. Is as soon as you just been banging my head against the wall trying to get in either before this next leg or get in short before this next leg. One of those two is going to happen as far as I'm concerned. We're either really in for it, and that's what it looked like right in here. I mean, we were breaking down and fast and hard, death crosses everywhere. And I was definitely short and ended up getting out, around break even or so. I did get a pretty good entry right in here. And then, was going long when we're like breaking through this resistance and hoping to get that next move. Doesn't happen. So I've just been banging my head against the wall for literally, a year and a half in this market and waiting for the next move to happen, which I believe will more than make up for all this difficulty, all this chop and whipsaw that has happened. Generally, the biggest moves follow the biggest periods of whipsaw. You get people, really chopped in and out, and then boom. That's where you have to make sure that you are continuing to execute, because you don't know if this will be the time where, it takes off or not. So you're just taking signals. But I, at least, will be definitely looking into other indicators to help me determine if I have reason to believe that this will be a good signal compared to what we've seen back in here. So let's go ahead and take a look at the daily ADX. Every time that we have created an all-time high, that since like let's go back in here, we have had a bearish ADX, and I wish that I trusted in the ADX back then as much as I do now. Because if I would have seen this, I would have not been expecting a big shot to the upside, which is what a lot of people were thinking, including myself at this time, because we just made a new high after a long period of consolidation in a very, very bullish market with huge momentum for years. So there was a lot of reasons to believe that we're going to take off here to the upside, but the ADX says not happening. Look at that. I mean, as we're up here, it's like there's no sort of, bulls are not taking control, and that's like the demand is dying down. See, every time, this is something to pay very close attention to. It's like a divergence in volume is very important. So right there, what do we have? Higher highs in price, and look what's happening with the buying pressure, the buying volume, you can say, is that, yeah, this one did make a little bit of a higher high, but it's like coming down, coming down, coming down, and then all of a sudden, boom, look at that. That's what you want to see to the other side. If that was going to be a real breakthrough to the all-time high and we're really going to take off, this is what you want to see. You want to see the market in the inverse, where it's like a green, DI way up here and the red down here, where it's like, okay, the sellers are completely losing interest because we just made new all-time highs. The bulls are getting really excited and piling in, expecting a big move. And that's what you want to see with this huge sort of spread in the DIs. And then you also want to see a strong ADX, like, either coming up through 20 or up in like the 30 to 40 range. This is where you would expect a big continuation to the upside. This is very different. Yeah, this is a higher high, but you can just see that it's dwindling. It's just dwindling. Lower high here, lower high here, lower high here, and then all of a sudden, when you don't get that big move to the upside, that's when people start to really, really, either get scared or just execute big stop losses, whatever the case may be. So let's go ahead and look at, as soon as that trend line broke down, what happened? Stops triggered, people get scared, and selling pressure shoots, buying pressure dwindles, and ADX gets into kind of strong trend territory. And then, sure enough, we continue down. So that's what happened there. Let's see what happened right here. Interesting, kind of seeing a similar situation where you're making new all-time, like we just had made a new all-time high right here. And what happens as soon as we make a new all-time high? The buyers disappear. It's like, what the heck? There shouldn't be much selling interest right after you make a new all-time high. It should be, there shouldn't be any built-up resistance from people who have been holding on to positions that are underwater, and there just shouldn't be, much to really worry about. But you see that as we create a new all-time high, selling pressure increases, buying pressure is decreasing. They cross, kind of have a bit of a trend line, however you wanted to draw it, maybe something like that. So we break down the trend line, DIs cross, AD, and you could have expected that ahead of time with a reasonable degree of confidence due to this rolling over. As we're getting to all-time high territory, you want it to be, strong. This is strong territory. That's not necessarily overbought. We can go much, much higher than that, right? So seeing it roll over as we're just creating an all-time high, and then you see, what do we see precede? Is that, okay, now sellers picking up, sellers picking up, sellers picking up, buyers dwindling, buyers dwindling, buyers dwindling, cross right there on that green candle. So the trend line is still fully intact, and it looks like it held as support on this pullback, and that we're ready to just create another higher low and take off. ADX says not happening. We're stuck in a range, or we're not ready to trend. We're basically not in a position to really continue in a very strong trend to the upside, and that would lead you to believe that since we've been stuck in this range for so long, that's probably what's going to continue. Let's take a look at this one. Okay, so we create a new all-time high. Start to think it's going to take off. ADX is not happening. It's rolling over. And look at how the buyers just are falling, as price goes up, 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 buyers down, 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 until eventually it crosses on this candle, which is right in line with a trend line. And you see why this is where I kind of grew to really appreciate the ADXs through this process, and how nicely it seems to line up with boundary breaks when they're real, right? We're wondering if the horizontal resistance, we're creating new all-time highs. Are we really ready to smash out of this godforsaken range we've been stuck in? ADX said nope, nope, nope. But when you break down this trend line, you're wondering, like, here, right? right in here, you're kind of wondering, is this trend line holding? And the ADX tells you basically like ahead of time that it's going to break down. Right on that next candle, it breaks down. And then here we see, the inverse of what we were wanting to see as we created all-time highs. So we have dropping buying pressure, and then all of the sudden we appear to break down this trend line, and the ADX now we see this spread, which leads you to believe, okay, that really did break, and now we should continue to the downside, because that's basically the inverse of what we're looking for if we were expecting to continue higher. Now what do we see? And this is a big part of why I think this time could be different, and why I'm actually, fairly excited. So now, back in here, right here, I was calling for return to all-time high territory before the end of the month, and we might get there well before. Maybe this is the top and we turn around right here for sure. That's a possibility, but we're awfully darn close. 28, 30 bucks, a percent, 1% away from all-time high territory, and we've still got 18 days or so left in the month. So it really looks like that should happen, and it may happen here even tomorrow, And what do we see out of the ADX? Totally different picture than what we were seeing back in here, with buyers dwindling, sellers increasing, right? Buyers dwindling as we made our run up. As we're running up, buyers are dwindling, and bears are coming in. Bears are coming in. What do we see now? Buyers are, it's like kind of the opposite. Now we have buyers coming up. Higher lows, and what's happening with the bears? They're now coming down. So this is the first time we've seen this action in the last year and a half, as far as I'm concerned. There definitely could be, plenty of people out there with different interpretation, but this is what I'm seeing, and this is a big, big difference to me. This is what kind of really confirms if you're rising prices on dwindling buy interest, then you should expect that to be short-lived. Whereas if you're approaching, all-time highs, and you just came off a couple higher lows, and now we've got the buyers building and the sellers continuing to make lower lows as the buyers are making higher highs, and the ADX rolling up in a territory where it's not, it would be very different than if it was up here where it's already kind of made its move. Here we haven't even really started, even though we've gone from 2830 up to 3010 or so. The trend hasn't even started for the bulls until this guy crosses 20, and then they'll have an opportunity to really build momentum as price is creating new all-time highs, which is exactly what I'm wanting to see. So we got the weekly parabolic SAR breakthrough, so we were ready to go ahead and enter kind of regardless. The system, this is something that I use for confirmation and to help me to determine kind of position sizes. So even if this was looking kind of bad, I still would have had to take an entry and just not really felt as good about it. Maybe, bet a little bit smaller in that situation. But now I am feeling pretty good about the situation. Let's just go ahead and zoom out. Take a look at the ADX on the weekly. Beautiful. Just got that cross right there. Starting to build. That is nice. Very, very nice. So this is just a great example of how I like to use the ADX to determine areas of exhaustion. And like I said, I didn't trust it enough in real time to really be, making any decisions based off of this. I was still largely learning it from Tyler, and that's where practice and experience, it will lead to you either realize maybe I need to try a new indicator, or it will lead you to having conviction in what it's telling you. And every time we're here creating all-time highs, that's all over the news and everybody's all excited, expecting big continuation to the upside, myself included, and ADX just wasn't even fooled once and provided some very strong signals. So, okay, let's take a look. S&P 500, 21% of my portfolio is in that. SPY is the ticker, 21%. And we'll just do a quick look at QQQ because it's basically showing very similar setups. And that's what you do want to see, this kind of across the board. If only one market is having increasing buying pressure and decreasing selling pressure, it's important not to let yourself, get overexcited about one market doing that. If every other major index, like the NASDAQ, the Dow Jones, maybe the Russell or whatever you like to follow, if the rest were showing the opposite picture, then you would really, want to take that into account. So it's nice that we see same situation here. Got that cross right there. Look, you wonder, it's like you're thinking, man, it sure looks like this resistance here is getting ready to break. We just had higher low, higher low, higher low, and maybe you could even draw in like an ascending triangle type of situation, and you're like, man, this sure looks like we're ready to break it. And what did the ADX right here kind of said? That the buyers are, that we're ready. We got that crossover right there on the candle before we broke out, and that's what the ADX will do a lot of times, is front run the breaks like we saw with the trend line back on the S&P. So what are we looking at here? Want to make sure ADX is looking similar. Want to check the SAR. All right, everything looks good. QQQ, 16.4% of my portfolio is in that. And we only have a limited amount of time, so I'm not going to go through every chart. DIA, 20.66. MDY, that's mid-caps, 13.44. And PHO is 5.11. PIO is 4.86. Those are some water ETFs, and I am not suggesting anybody copy what I'm doing. I'm just sharing. I'm just basically giving you guys an idea of maybe how just to start thinking about constructing portfolios. Like I said yesterday in yesterday's show, watching somebody trade in real time is really, really eye-opening, and is what really helped me learn how to trade myself. And same thing for portfolio allocation and portfolio management. I've been doing portfolio allocations for years before I got into Bitcoin, and I'm no longer a financial advisor, but I've been doing it for a while, and I am very comfortable with it, and just kind of sharing what I'm looking at buying is a lot different than like showing what percentage of the overall allocation it is. Because if I'm looking at buying a stock and it's only like a couple percent of my portfolio, and you guys are thinking, oh man, that's a great, maybe this could be a really good buy, and you go and put 20% into an individual stock, that's a huge mistake, and something that you hopefully by me sharing my allocations, it's going to help you learn, and maybe wonder, oh, it's a lot of these are just in indexes, a lot of this is not like there's barely any individual stocks. So just going through that. And now we will get right into the stocks that I did buy today. A couple that I think are sitting pretty nice. Okay. So there's two trend lines on this chart, depending on what time frame you're looking at. And this one, we can see that, in my opinion, this is an important area. We have higher low. We can potentially, well, we're going to zoom in here real quick before getting into why I like having that one down there. So you see that it looks like if you connect the bottom of this to this wick here, it sure seems like that's an important area. Now we've got 1, 2, 3, 4, 5 candles that are, I guess 1, 2, 3, 4 more candles that touch this trend line. So I definitely like having that trend line down there, and then I also like one more right in here. So keep an eye out, for some potential resistance right there. And then we can pencil in the top of that guy. Okay. So we have what looks like a pretty good setup to me. And I'll show why. So we notice back in here, came right down to the 200 EMA on the 4-hour chart and right on this trend line. And then, kind of took off with a Bill Williams fractal that developed. So you have high, high, low, high, high fractal here. And if you follow me on TradingView, I haven't posted for a while because I'm just basically waiting for this triangle to break down. Last post I made was expecting that to happen. But I do have a post that's at the top of each and every time I make a post, at the top is some stuff like my strategies, process, and then how to buy the dip. 2 methods that I use for how to buy the dip. It's either using the 50 and 200 EMAs or using a trend line with the Bill Williams fractal. So give that a read through if you're interested. I have also provided a advanced dollar cost averaging for people who are not interested in actively buying and selling and they just want exposure to Bitcoin. Definitely dollar cost average. And then here, I just outline, here's the dip buying strategy. And so here we kind of have a combination of the two, right? So what I outline is that I buy pullbacks to the 200 EMA on the 4-hour and the daily, or will look for trend line touches with fractals. Because when the price is coming down like this, and you're coming down to test this, some people may not want to try to catch that knife and would prefer to wait for more confirmation. And what's a good way to do that is to wait for a Williams fractal to develop, because you can use this as a stop loss. So you wait, you need 5 candles, 1, 2, 3, 4, 5. So now we have our Williams fractal, and we can enter basically on this open if we want, or we could wait for it to take out the high of this candle. I'd probably do the latter. Just wait for just that little bit more confirmation, and then set the stop right here and trail that stop every time a new one prints. So if you did that here, you would have been like buy, trail, 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 we're out. And then maybe we're ready to buy back in at a very similar price. So this is one that, maybe it doesn't work out in my favor. And if that's the case, I know where to get out, and I know that it's not going to cost me much. If we do take off in a big way to the upside, there's a lot of room to the upside, and this is a very, very strong stock. Let's just go ahead and zoom out. This is a hyperwave. So I'm buying individual stocks. I do like to focus on, stuff that's phase 3 or phase 4 of a hyperwave, because that is where I believe the most gains will be found. You can believe whatever you want. So we see that we can draw in some hyperwave lines. And what would be debatable, like this was tricky right here, because really, definitely that's the trend line. And that's where you're expecting it to hold before taking off. And what's weird is it breaks down and then finds support without, coming anywhere near phase 2. And really just kind of coming back to retest this prior all-time high, fill a gap in here or so. So now that we have this action in here, it makes it definitely not nearly as clean back in here. This was just absolutely perfect. But now that's kind of, don't love that at all, because there's no way you would have drawn that in real time until it's too late. It's just weird what happened in here. But notice how we are now starting. We have taken off to all-time highs, and we did get that follow through here. I mean, this thing's just been continuing to crush. And now we've got a new trend line that's at a steeper angle. So I'm thinking this is phase 4, even though this part really ruins like what was about a perfect pattern. But that's okay. Sometimes you just have to have some sort of, you've got to be able to be flexible in the moment. And right now, just because we have this that kind of ruined what was a perfect one, I'm not going to just discount what we're seeing here. And even if you don't want to say it's a hyperwave, just say it's a bull trend line, and that's it. Who cares if it's a hyperwave? We've seen time and time again how if the price breaks down a trend line, you need to get out. I mean, I'll continue showing, but I don't know any better way, I mean, in my opinion, to quickly recognize when reversals are happening, specifically when you get a pretty steep, the steeper of an angle that you get, the more important that trend line becomes when it breaks down. So definitely don't love seeing this engulfing candle, but do like seeing this wick here. And then I also like seeing this Williams fractal here. Right? High, high, low, high, high. Okay, so we've got support, or we don't know if it's held as support yet. This could absolutely break down tomorrow. We've got a trend line test and a fractal, and backup from the 200 EMA. So it's kind of, that's what made me think of this. It's like kind of like a combination of my favorite strategies where we didn't quite get the test here, but just having a trend line in line with a moving average is my favorite thing to see, because you've got reinforcement. It's like a reinforced trend line, and it's much, much stronger when you've got this moving average kind of doing a sine wave along a trend line. That's just absolutely beautiful. Don't really like seeing how much this has started to decrease. Like I said, the risk reward here is just beautiful. I mean, don't have to take on a whole lot of risk, and I believe that the upside is big. And that's where, so I start with the broader indexes, like the S&P flashes full buy signal. Like maybe I wanted to buy here yesterday because we had fractal, or it would have been right here actually, like at the exact bottom, because we had high, high, low, high, high right here. We could either be looking to buy that because the fractal's printed and it's would be super good risk reward, or we could, kind of wait for the high of this to get taken out. And I wasn't interested in either until the stock market confirmed that it's time to be fully in. Because if the stock market is, the overall indexes are, turning bearish, then you don't want to be buying stocks just because they're testing a trend line, right? You want to be looking for a setup where it's like, okay, the stock market's really showing some really strong signs and maybe giving me a signal to get fully entered. So now I kind of want to go find some really, really strong stocks, preferably ones that are in hyper waves, and look for, maybe some dip buying opportunities where the stock market is taken off and this thing is, has been dipping. Okay, so Visa, 2.95% of the portfolio. So you see it's, 2.95%. That's, and a very tight stop loss. So if this goes against, it's just, 'tis but a flesh wound. But if you are not aware that the bulk allocation should be in indexes and stuff that's more diversified and you're just a little bit safer than individual stocks, and you're diving in on something this with a significant allocation of your portfolio. And when I say significant, anything over like 5% would be making me feel uncomfortable for the most part. So it's important to me to show maybe some good setups, and also what in the heck. also get out talk about how important it is to have a very, diversified um, and safer allocation overall, where the bulk is in, broad indices. And if we're looking at buying some stocks, it should be a very small percentage. Okay, so MasterCard, kind of same thing. When I saw Visa was looking good, I figured that I should probably give MasterCard a peek. And look at that guy. I mean, is this something you want to own? Something I want to own. Okay. So we're seeing another beautiful hyperwave, one that kind of got a little screwy, and maybe you'd call this a parabola instead of a hyperwave because of this action in here. It's a little bit more, there's an argument to be made, but I would not be inclined to agree with that argument myself just because what we're seeing here. If this was a parabola, then it broke down around here and should have corrected on the order of 80%. And instead, we find, and this one works a lot better. This is a lot cleaner than Visa. Visa, you had no way to catch this in real time. MasterCard, you did. And so this is perfectly valid as far as I'm concerned. And I drew those lines quick, so bear with me. But if you're looking at this trend line here, like this is the actual phase 3. Like this is how Tyler would have had it drawn. And if it accelerated here, he would have probably penciled in phase 4 and said that that is phase 4. But he would have had this line waiting to catch it on the comeback. And that's what's important, is that if you can draw it in real time and you have good reason to believe that this is a legitimate trend line, then that's a lot different than what we saw with Visa, where you're just having to kind of like, basically overlook something in order to just focus on what's happening up here. And again, I don't care if you want to call it a hyperwave or a parabola or just a trend line. Either way, it's something that is very, very important to me when you get these accelerating trend lines, either to the upside or the downside. And we've been getting it to the downside on crypto, on some alts a lot lately. So what do we see here? We see a hyperwave that is in phase 4 as far as I'm concerned. And we see a test of the phase 4 trend line. So potentially you want to draw it using that close. I explained on Visa why I'm inclined to keep it on these wicks. I do like how that is coming together. Maybe, it's debatable. Let's go ahead and zoom into the 4-hour chart, see what we can see there. And let's just thinking about what I learned yesterday, that some of these patterns really come out nicely with these Henkinashi candles. So that was one thing that I learned, was I should keep that in mind when I'm having trouble finding a best fit line. And what do you know? It's already paying off what I learned yesterday. Love it. So here, let's see, we could draw it a couple ways. You would want to use this close. Yeah, that's basically like right there like that. So now we've got a best fit trend line that I really like, and I like it here opposed to drawing it another way, like maybe you were looking at drawing it like using this low here. And why I like it is because it's parallel channel. Like when you get this, that's why I really like connecting these wicks down here, is it's parallel to this line, which makes me just more inclined to believe that it's the right way to draw it. Whether or not you agree, that's up to you. And we're basically seeing the same setup, and just look how much cleaner these candles are. It's amazing. Just so much different and better as far as I'm concerned. Like, look at this Williams fractal. Low, higher, low, higher, low, higher, high, higher, high. Just very, very clean. Let's throw on the normal candles. It's just like gaps and wicks and noise, noise, noise. And, it's still Williams fractal, but it's just not as clean. I really like a chart without all those gaps. It's just my mind likes that. So let's see what we got. Looks like just this 4-hour close post market. When if this guy closes above 269.32, then we would get a fractal print right here, and potentially that would be a signal indicator. Maybe you wait for it to break above here. Maybe you think it's going to come back down here. Maybe you just pass entirely and don't think that this is a good setup at all. All good. Every side of the argument has good reasons, I'm sure. So MasterCard 3%. And did I mention gold earlier? Gold I have 2.36%. That's because I have been scaling out. We'll take a quick look at that and then save some time for Bitcoin. So I've been taking profit on my gold position. So I've got 2.36% gold, and the last is about 10% is in cash, which is from the profit taking on gold, which will be hoping to re-enter on a dip at a better price. And so far, we are doing good. I think I talked about on the show selling this guy here due to the shooting star as well as the ADX on the weekly. Getting up here to quite over exhausted territory. Last time we were here, it was like at the top of the bubble, so that was hugely significant to me. Last time we got above that, it was at the bottom of the bubble. It's just amazing what this thing can do. Okay, so I'm seeing an overbought ADX, and I am seeing a shooting star, and I am starting to scale out right here. I was entering back in here and did a lot. It was pretty loud about my entries because it was just such a sweet setup. We had like cup and handle, bull flag right here, pull back and into golden crosses. So I was really, liking this action here. And then we look at that spread in the buying pressure as it has started to, rally. And then you do get that little divergence, lower high in buying pressure, higher high in price. So I exited about 15% of the exposure here, and now I am trailing my stop right here. And each week that progresses, I will trail it again. And, watching me do that one time every week, it might take a year for you to see what I have seen out of this SAR. But yesterday, you got to see what I've seen out of this SAR, in 1.5 hours, where when the position finally did go in our favor, it was just amazing how that SAR kept up with the price, kept accelerating, and then as soon as it did break, the market turned around, and we got out very close to the top on that position. So that was a very good example of why I love this parabolic SAR as a stop loss. So I'll be exiting the rest of that position. 2.36% of the portfolio is remaining, and it's in profit, and it will be exited if that SAR is taken out. It's only a matter of time when it's taken out. So whenever each week we get a new one, I'll be accelerating that up. Let's get into Bitcoin. And I really do have to keep this brief. Okay, so basically, there's just not much to say about the price of Bitcoin until this thing is able to break down this descending triangle. It's almost disservicing myself and you guys to really overanalyze it, because it just, we got that death cross on the 4-hour 50-200 EMAs. It crossed right back over, and now, it's the short was signaled, and this would be where I would add. I'm not short Bitcoin, I am short Ethereum. If we do break down this line, I'd be interested in adding. Until then, there's just not much to say. And this is a good time to look at lower time frames, because when there's these higher time frames are doing nothing, you can potentially see some clues on the lower time frames. So we do see that we're below the 50-day moving average on a couple closing bases. Been watching for the daily SAR to break, still intact. Might be starting to get some sort of pivot here. Low, higher low, higher low, higher low. Definitely something to keep an eye on. So this is an important area where if we can close above 10,300, now it's really starting to look like it may be, ready to break. Let's take a look at the ADX. Just not going to happen. And this is what's made me convinced that, I'm just not worried about this break into the upside. Because not only are we below 20, we're below 20 and falling with the DIs like kissing each other. There's nobody in control here. And when nobody's in control, big boundary lines don't get broken. In my experience, in my opinion, anything can happen. In the blink of an eye, the buyers could take over in a big way and turn this thing around right here. But it's just something that seeing this makes me think that we will not close above 10,300. And for closes, we can definitely use traditional candles. So we are rallying right now, and we are above. But the most I would expect, and maybe we get a daily close above, wouldn't be that significant because of this ADX. I would say that the most we would be doing right now is just returning to the top of the range. And then when the ADX is below 0 and falling, it tells me that this range should continue to hold. And the range that we're in is a descending triangle. So this is really at most what I would expect. This is a significant area though, this 10,370. So it will be interesting to see what the volume is like on lower time frames. Interesting. So that's a rather bullish setup. And let's get it back to the HA. Okay. So trying to confirm a bull flag right now. But it hasn't done it yet. It's only a 15-minute chart, 10 minutes left in that candle. If it does confirm, I would have no problem using that to provide a target, and it'll be interesting if that target is in line with that arrow I've already drawn. So not only is it a flag, it's a flag with a parabolic pole, which is even more bullish. So we take that, and if it confirms, and look at that, that's incredible, absolutely amazing. It's like to a penny where it would go to the top of that line. If this confirms, that would be the target, and then we can move that up just a tad. But isn't that just incredible how we have a pattern providing a target which we already identified just using the top of that descending triangle and the ADX. So definitely could see a move up to 10,600 and would be very surprised if there was follow through based on the ADX. Let's go ahead and take a look at a slightly higher time frame. So buyers are starting to pick up. Still not seeing any volume. Like we would want to see if this is a real breakout here. We'd sure want to see a volume spike, kind of, like something. Notice how moves happen after spikes in volume. When you get no volume up here towards the top, that's kind of, I think, what the ADX is picking up on the 4 hours. That that there just isn't this buying pressure which you would expect. So if we do go up from here to 10,600, I would be thinking that's a pretty darn good selling opportunity. And then if we just are unable to confirm that pattern, that would tell us that we should probably just continue back down to the bottom of the range. And this is pretty bullish, seeing that it's consolidating into a bull flag on top of a potential golden cross on the 30-minute. Let's see what the hour looks like. Yeah, definitely significant resistance here. Man, these candles are so nice for identifying important boundaries. I don't think I saw this using traditional. Okay, So that is definitely horizontal resistance that, like I said, there just isn't a whole lot to say about Bitcoin until it can break out of this stinking triangle. I'm just going to expect that it stays inside. Prove me wrong. I was definitely wrong the last time, and had good reasons for the way I was looking at things, but potentially, should have been expecting the range to hold until it was proven otherwise. And the hourly is looking pretty darn good too, seeing that we just crossed zero. We're in strong trend territory, and we've got the buyers picking up and the sellers kind of starting to dwindle. So definitely we'll be watching for a return to 10,600. I'm not calling for it, but that's a call I would be willing to make if we confirm this. I mean, even on like 15-minute chart, 6 minutes left, close above this candle right here would lead to that target. Okay. Sorry, no time to really look at the chat today. See Robert mentioning Lucid SAR. I'm wondering if that's Robert from the Hyperwave group. That'd be cool. And yeah, definitely the only parabolic SAR that I know of out there available that uses Wells Wilder's original calculations is the Lucid SAR. If you just search on TradingView Lucid, it'll pop right up. It is free. Tyler and I developed that. We figured out the formula, and Casey Bowman developed it, and I'm actually talking with him about a potential significant improvement that we could make that I'm really excited about. Had a bit of a light bulb moment yesterday about how we could combine it with another indicator that works really, really well. And there's only one other trailing stop method that I know that can even hold a candle to the parabolic SAR, and I thought of a way to potentially combine the two, and that could be really neat. So definitely stay tuned for that. And yeah, I have a number of big things in the works. Got another indicator that I have been working on getting developed. Basically the signals that I have been going over in the show, I am getting that developed into an indicator that I will plan on keeping private, but making available for a fee. So definitely stay tuned. I'm really excited about some things to come, and I appreciate everybody for tuning in today. And for contributing in the comments, contributing in the chat. If there's anything, one other thing I wanted to mention is yesterday I was going through a lot of calculations really quickly that if you haven't seen the BitMEX tutorial series, you wouldn't really know what's going on and what I'm calculating. And I did get a lot of questions. I should have mentioned that on the show. So if you watched yesterday's live trading and you were kind of not knowing how I was coming up with my position sizing and my risk, go to episode 4 of the BitMEX tutorial, and that's what it's all about. It's about what cross leverage is and how I use it and how I run through calculations using stop losses to make sure that I'm never getting liquidated. Bottom line, you should never be getting liquidated. If you do, you are making a big mistake because it's costing you 20% of your position size when you don't need to. You just need to make sure that you're not over leveraged, and not being over leveraged means that your stop loss is getting triggered before you're getting liquidated. So it has been a great show, I think. Let's keep our eye on the stock market. I'm really excited. That ADX is telling me that we're ready to smash right through to all-time highs. And if that happens, remember that the stock market is in the biggest hyperwave that has ever existed. It started in like 1980, phase 2, and we are now only in phase 3 of a massive hyperwave. And if we smash through to the upside, then phase 4 could be right around the corner, which I have been thinking will happen every time we kind of get up there and start to, especially now that we have some higher lows, which potentially could be used to drawn in to pencil in that phase 4 line. Very, very exciting stuff. And that being said, I am going to call it a day. I will be on the road tomorrow. I'm heading out to Las Vegas on my way to the Ugly Old Goats Bitcoin cruise that will be that following weekend. I'm going out a little early. I'm going to stop in Vegas for the weekend and play some cards, hopefully make some money and enjoy myself. And then I will be going to visit my sister. I am bringing my laptop, and I do plan on continuing streams. I'm not when I'm tomorrow I'll be driving all day, so not tomorrow, but potentially over the weekend and into next week. I've never streamed from my laptop, so just hopefully I'm able to figure that out. And if so, I will continue streaming, and we'll look forward to potentially doing a live stream from Ugly Old Goat's cruise that we've got coming up, which is for Bitcoiners and entrepreneurs. And there is still some seats left. I've got a affiliate link down in the description. So if you are interested, come on out, and I would love to buy you a Coors Light or maybe a cocktail with an umbrella inside of it, since we'll be out there on the ocean. All right, have a good one.